Hi, I'm Natalie Brunell. Thanks so much for checking out the Coin Stories podcast, where we get to hear from experts on Bitcoin, investing, financial markets, and the current state of the economy. This podcast does not provide financial advice. It is for educational and entertainment purposes only. This episode wouldn't be possible without my partners. First up, Okcoin. Okcoin is one of the fastest growing and most secure global cryptocurrency exchanges where you can buy and learn about Bitcoin. Okcoin is committed to investing in educational content, funding Bitcoin and Lightning developers, and providing grants to entrepreneurs in the space. Okcoin has contributed more than $1 million to core devs and counting, has one of the most active Lightning nodes, and I also love that you can toggle between Sats mode and BTC in your portfolio. I first heard about Okcoin a few years ago from one of my favorite voices in the Bitcoin space, Saifedean Ammous, and I signed up to start dollar cost averaging. If you want to join me, head to go.okcoin.com/Natalie for $50 in Bitcoin when you sign up. Well, Obi, first of all, thank you so much. I am honored to get to talk to you because I've heard nothing but amazing things from the likes of Jeff Booth and Greg Foss, Preston. I mean, everyone seems to love you in the Bitcoin space.
Well, thank you. The honor is mine, by the way. Jeff and the guys talk very highly about you as well. So this is the first time we talked ever, and hope it's going to be a really enjoyable experience.
I'm so excited to learn more about you. So let's take it all the way back. I understand that your family, you are from Nigeria. So tell me a little bit about your young life and growing up there.
Yeah, so actually, my heritage is from Nigeria. I was conceived in Nigeria, but I was born in the UK. So I always like to say my mother made it to Heathrow Airport, and I combat rolled down the stairs into London.
Oh wow!
But as I grew up, I would go back very frequently from a very young age, as long as I can remember, and. It's a tale of two worlds, because on one hand you're growing up in the first world and all the accoutrements of the first world, and then you go back to Nigeria and you have daily power cuts, sometimes lasting several days. You have to help out. Cooking involves taking actual live chickens and cutting their necks, and in the garden or the back of the house. You had to do chores, which involved walking for very long distances. And generally, by the time you got back, you were, as a young kid, you were begging for the luxury of the first world.
Oh, wow. Well, so what did your parents do? Why the back and forth? How did they end up in the UK?
It's quite common. My father had a number of businesses that he'd set up in Nigeria. In fact, when he was young, the Nigerian education system at the time was such where you didn't necessarily have a right to go to secondary school. You had to either pay for it or you had to attain a certain level. And my father, being the son of, again, this was way back, but there was a period of time where polygamy was legal in Nigeria. So my grandfather had multiple wives.
Wow.
And you could also inherit wives as well. So the oldest son would inherit it was a different time. So my father was the son of one of the least favored inherited wives. So when it came out to doling out money for different things, he was normally last in the line. It was very much.
Wow. That's fascinating.
So one of those things was, even though he was incredibly gifted and an exceptional student, my grandfather for many years, this is a story I've never actually said to anyone before, but my grandfather for many years, who, by the way, I inherited his middle name because I was the first grandson born after his death, and under Igbo tradition, I would inherit his name. But he refused to pay for my father to go to secondary school. So for many years, he was held back, even though he was incredibly gifted, until some teachers saw his capability, and literally begged my grandfather to let him go to secondary school. And he achieved that, but he only on the condition that every year when they had to take exams for the next year, he had to be the best. And so he had to be the best in that entire region of Nigeria every single year to make it through to the following year.
Wow.
Which he did. And he went on to set up a very successful set of businesses in property and real estate in Nigeria. But if you to think about the Cantillon effect and being far away from the money spigot, well, if you're in the developing world, you're the furthest possible away. And he knew with his sort of finance training, because he studied in finance, that you needed to get to an economy which was closer to the spigot. And so he sold everything, or almost everything, to move to the UK, where he met my mother. They came back to Nigeria when I was conceived, but still, he sold everything and had to start from scratch. So he had to start in some of the most menial jobs. He had to be a janitor, he had to be a caretaker, take 3 or 4 jobs at the same time, even though he was more qualified than everybody in the companies that he was providing the work for, which is a common story when you're first generation. So yeah, that's my mother again was one of the, she was the hardest working person I've ever met. Elon Musk has nothing on her.
Wow.
And I think I got a tiny portion of her work ethic, and hopefully some of the intellect of my father as well to combine together.
Wow, that is incredible. I relate in the sense that I also saw my parents working really, really hard, first generation immigrants here. How did that impact you? Did you grow up thinking, I have to, succeed, I have to gain financial security? Because I don't know, for me, it was like, I want to make them proud. I also don't want to have a family and have them suffer some of the financial issues that I had growing up. So what was it like? What was the impact on you growing up?
Yeah, I always say they were hardworking, working class Nigerian parents. So that had multiple aspects. One, I was growing up in the West, in the UK, but I still had this sort of Nigerian focus on academic excellence, and the expectation that you had to. I was effectively a low performer by not getting a doctorate. Almost every other Nigerian is a doctor of this or doctor of that. Wow. So I obviously went on to university, but that's very much entrenched into the culture. You respect age and you respect academic achievement. So that was one thing. The work ethic, as I said, of both, but especially my mother, she was incredibly hardworking. Affected me and has lived with me ever since. So I like to think I'm a very, very hard worker as a result. And just generally seeing the sacrifices they made for us, for the family, at least in my case, made me feel that I wanted to, at the very least, try to live up to what they had achieved. And my view was also, again, going backwards and forwards between Nigeria and the UK, I realized that I was incredibly lucky. I was lucky to be born, especially when I went back to Nigeria, to be born a man. I was lucky that my father made it through this sort of very, very low probability set of circumstances to make it to the UK. Because when I saw his brothers and the children of his brothers, they were all direct cousins, but everyone is about at least half a foot shorter than me, for example. Wow. Even though they're direct cousins, you can see the difference between the cousins who are in America, who maybe I would say a couple of inches taller on average. The people in the UK are around 6 foot. And everybody in Nigeria is like 5'5", and that's purely to do with food and nourishment and environment and pollution and so on, struggling to survive. And whereas I'm in the UK, because of all of this circumstance, healthy, not having to deal with the challenges of, there's a number of challenges to life and liberty you have living in somewhere like Nigeria. So I realized I was incredibly lucky just to be born here. And so the least I could do is work really, really hard to try and achieve as much as I can from that opportunity.
Yeah, that's amazing. Was there a sense of, I need to help, or your family needs to help your family in Nigeria? And like, how did you think about money back then?
So I think that there was a sense that we needed to help, but it was also a double-edged thing. On one hand, as many families did, a large percentage of our capital would go back to the diaspora. But on the other hand, time and again, you would see people just waste the money, and it wouldn't last in their hands very, very long. And it became very clear that there were these deep-rooted aspects of the environment and the education around money, or the lack or the miseducation around money, that were apparent in the West, but are even more apparent in the global South. That meant that it was very hard for people to build wealth. So this wasn't just a problem of lack of money, but it's also lack of monetary education.
Sure. Well, so what got you interested in computers? Because I know that you ended up studying computer and cognitive science. So were you kind of tinkering around that type of technology when you were young and thinking, this is what I want to do?
So, I mean, I'm 47. So when I was a kid, we were working class. We couldn't afford computers, which were very, very expensive at the time. But I went to, I remember very clearly, the first day of secondary school. I don't know what you call that in the US.
High school?
Is that high school? High school.
How old were you?
The first year, I was 12, I think it's 12.
Okay, so that's
11,
like
12.
middle school, yeah.
Yeah, middle school. So you go from 12 all the way to 18 is high school.
We have middle school and then high school a lot of places. So.
Okay. So middle school, the first day you'd go into the assembly and the headmaster would come in and say, "Hey, hello to the new class," and at the end they encouraged us to try some after-school activities to broaden our horizons. So I was like, "Fine, you did your first day of school, got to know people," and as I looked at some of the after-school activities, and I saw there was this chess club. And I thought, well, my parents would like that, education, academic achievement. Let me join the chess club. So I joined I went into the chess club, and it was 3:30. And at 4:00, I was in the middle of a move on the chessboard, and everybody ran out of the room, and including the person I was playing against. And we were mid-game, and I went, "Where's everybody going?" And they went, "Computer club." So what's this computer club thing? I followed them in, and I saw these computers, and everybody's playing this game. It's a bit like Donkey Kong. And at that point, I was smitten. I just wanted to know how this thing worked. I was the last person to leave. The computer science teachers, who were amazing, recognized that I was really interested in this and helped me learn about programming. I started programming games. And before I finished secondary school, high school, I was building neural networks. And I programmed the neural network to sort of add numbers together and learn the concept of addition. I then entered university. And it was around the same time I joined an organization called Mensa. I think I was one of the younger people at the time. I entered university about a year early, and they didn't really have computers, AI as a subject, but you could construct it with a combination of computer science and cognitive science, which I did. And I continued my love for computers. At that point, it was still on AI. I built a a neural network that would read your brainwaves and control a mouse cursor and stuff like this. But then halfway through my university, the internet and the World Wide Web really became a big thing. And NCSA Mosaic, which was the precursor to Mozilla, came out, and the world, the internet became open to you. And at that time, a number of us realized that this thing was going to be very, very big. You opened up the internet before it was this sort of closed room. And I just became infatuated with the internet. I worked on the first, so we saw a website by the BBC, which was a terrible tech site. And one of us mailed them saying that site's really bad and you can maybe make some changes. And then someone replied to us, this is in the early to mid 90s, and saying, well, I'm the only person in the BBC working on this internet thing. Could you help me? And so we met them in a pub, and we built the first site for BBC Radio. And from there, I just entered this career of being in the UK and European .com space. .com one, I was the first or the second employee for a very successful, that went on to be a very successful .com startup that was sold for £2 billion pounds several years later. And then I was around in .com too, so I was the CTO for a massively multiplayer virtual world. I joined, we had about 4 or 5 million users. When I left, we had about 30 million users. It was very popular in the US. It was called WeWorld, Weemies, these little characters.
Oh, wow.
These virtual characters. They were like Habbo Hotel and Club Penguin. And then I decided to work for myself because I realized I'd been helping many other people become very successful. I did okay from it myself, but I became an entrepreneur, and I started my entrepreneurial job.
Yeah, I mean, it sounds like being a part of the revolution that was the internet so early. I mean, from what you're saying, it sounds like you could have just retired if you were some of the earliest, employees. But you wanted to keep working, or?
I don't think I could have. I did well, but but I don't think I could have retired. I guess, but even so, I definitely am someone who cannot. I've tried before. I'm now in a position for quite a while where I could retire, but I've tried it and it doesn't last. It doesn't take very well. It doesn't last. Like early this year, I promised after selling CoinFLEor to take, a couple of years off, and that didn't last very long. I think that lasted about 2 months. I went to Mexico for a month, and I went to Indonesia for 6 weeks, and I learned to scuba dive, and that was it. That was enough. I needed to go and start actually doing something that for me was valuable and helped the lives of others.
Well, that makes you a real Bitcoiner, because I think that when you are just in repose or you're just, giving into pleasure, your life doesn't have as much purpose. Whereas if you're working, it gives you some meaning. So, well, just out of curiosity, before we go into CoinFLEor and a little bit of Bitcoin, were you essentially helping build these sites and platforms, or what were you actually doing? What was your role for all these companies?
So for all these companies, it was always technical. So the first company, I was the second employee, and I came on to help build this online auction company. It was like a European version of eBay at the time. And it was initially me, the founder, and one other. It was literally one of these startups where it was in a room above a garage, where if a phone call came in and cars were coming in, you had to put it on mute because it would shake the entire room. That's how we started. And I built the first version of this site. We had a lot of success. It grew, but the first version needed to be re-architected. So I re-architected and built the second version of the site, but this time with a team of 5, and it re-architected and re-grew again 10, 100x. And then the third version of the site had a team of 150, and that all happened in 18 months. So I went from myself to 150 employees just in technology alone. And as in my early 20s, I learned a lot about managing teams, managing rapid growth. We were dealing with huge amounts of auction transactions and very large amounts of value being traded. And so, yeah, then we rolled out across Europe. And then another company I was in, which was another .com, but it was an online travel company for 4 years. And again, I was head of technology, chief application architect, and we built out a number of firsts there as well, rolled out all across Europe until we were eventually bought by Sendon, who own Orbitz and Avis and this very large group.
So is this when they refer to as like Web 1.0 or Web 2.0? Is that essentially what it is?
Web 1.0 is, I would say, is e-commerce, which is sites that are either informational or they allow you to buy and transact. Web 2.0 is where you have the social element. So Facebook or massive multiplayer virtual worlds where people actually are communicating with other people, as opposed to Web 1 is you're communicating with the service and you're getting some of the service, and there could be 1 million people using the service or 2, you don't really know, you just know the service. With Web 2.0, it only gets its power if there are a lot of other people using it. So Facebook, if it was just Johnny No-Bates, then it's not a very fun site. And Web 3.0, that's now being hijacked, so we don't need to talk about that too much.
Okay, well, maybe we'll circle back just because I think a lot of people, they catch on to that buzzword and they're like, oh, Web 3.0, it'll solve all of our problems. But okay, so how did you come to build CoinFLOor? Because I heard you with Preston talking about how you heard about Bitcoin when it was like $100 or so, and then it crashed back down. You didn't really take it seriously. Then all of a sudden you come back to it and it had gone up to a couple $100. You're like, hey, this technology might actually work. So tell me a little bit more about that journey and CoinFLOor.
Yeah, so as I said, I was obviously a card-carrying geek. I worked in the computing space. I studied computer science. I always and continue to spend hours reading up on, other than Bitcoin, I'm reading up on AI and so on. Separate to that, because of this experience of where I came from and seeing these two worlds, I was aware of, and I would wax lyrical about the inequity, the unfairness in the world. And the reason, but this is interesting, the reason I had a problem with it was very much an engineer's efficiency mindset, in that the world is losing out. Right now on this planet, there's probably 50 Einsteins somewhere. And because they're not providing value to the world, everybody is losing out. So we need ways to surface that talent up so that these talented individuals, wherever they are, and they're likely not all going to be in Western Europe and North America, wherever they are, they can add value to the world. We will need, there's probably a dozen Elon Musks, a dozen Einsteins out there. We need to find them and have them helping us. So therefore, I just found it really depressing that the world didn't have a way of surfacing that efficiency. So when when Bitcoin came along, at least 2 different friends sent me links very close to each other about this thing. You should read it because it's the world's first meritocratic money, and it's this incredible technology. And so Obi will definitely find this interesting. And I did. I read the white paper. This was in 2011, actually, 2 years before CoinFLOor. And I read the white paper, and actually I found the technology really, really interesting. But maybe I was cynical at the time. I thought, well, governments are going to kill this thing. It's not going to last very long. I'd buy a bit, and I bought a little bit, and it was, as I said, like under $100. It was in the 90s or so on. And then it crashed down to $2, $3, $4. And I'm like, okay, yes, see what I mean? It's not going to last. Anyway, I was running my previous business at the time. 2 years later, that business was being wound up, and my soon-to-be co-founder, who I'd angel invested in a previous business, came to me and said, look, there's this Bitcoin thing. We should try and look at doing something with this. I went, Bitcoin, that's still around, let me check. And the price was in the several hundred. And I thought, okay, so it's really, really interesting technology. It's this meritocratic money as well. It doesn't matter who you are. It's you just, if you can acquire it, you have the same protections afforded to you no matter where you are and so on. And that's all you need, a level playing field. And then we can surface the right people. And it has staying power. We need to do something here. And that's when we launched CoinFLOor, and the rest was history from there.
I mean, that's amazing. So tell us a little bit more about that company, because it was the biggest Bitcoin-only exchange in the UK, right? Is it still?
No, I mean, it's been sold and it was an asset sale. So all of the customer base is sold and have been subsumed into other companies. In fact, there are two parts. One faithful part was spun off a few years ago. It was called CoinFLEX X. We made the world's first physically delivered Bitcoin futures exchange. And that was sold to a consortium of Chicago trading firms and Hong Kong based proprietary trading firms as well. And it was renamed after being sold to CoinFLEX, which you may have heard in the news now more recently. So that, but we sold that, and more recently we had a remaining stake and we sold that just before selling. And the other part was a Bitcoin-only spot, Bitcoin-only exchange, and that the customer base and users, etc., was sold to CoinCorner, because that was a. I know the guys there; they're great people, and they were. Although we had multiple suitors, I really wanted to sell it to someone who was philosophically aligned to us. But as a background, we launched in 2013. Again, it was actually just off Hatton Garden, which is famous for the gold area of London, which is quite good because we were making this digital gold. And around the corner from Chancery Lane, which mentioned the law, which is Bitcoin is law as well. So we just loved the feng shui of the area, and we always stayed around that place. You've got this sort of law and where code is law and gold all together. And we started with one desk shared by 3 people, and we slowly grew as a company until we, at our peak, were doing 70% of the trade volume in the UK. Wow. And in that time, it was this roller coaster. I always say that first you ignore you, then they love you, then they fight you, then you win. When we launched, we were at the tail end of what I could call the Bitcoin was ignored period. Mm-hmm. I actually have this pinned tweet on my Twitter, which I tweeted in 2020, which I still believe more so than ever is correct, which was 2008 to 2013, Bitcoin was ignored. 2013 to 2018, Bitcoin was ridiculed and laughed at. And 2018 to 2023, where we are right now, Bitcoin is attacked. And in 2023, next year, to infinity, Bitcoin wins. And I'm actually more convinced than ever that 2030, next year will be the year Bitcoin clearly wins. Mm-hmm. But when we launched, Bitcoin was still being ignored. And then we had another run up in price. And Bitcoin started to be ridiculed at that point. And we were, the first 5 years, people were always, especially in the city of London, just laughing at us, saying this is just a joke. Maybe the blockchain thing is useful, but the rest is a waste of time. But we kept on pushing through, and we kept on growing until 2018. Again, we went through the Bitcoin Cash wars. Many other exchanges wanted to back this SegWit 2x protocol. We were one of the few exchanges that said no. We are going to go where the majority of users will go, and that is what Bitcoin is, not what we as an exchange decide what Bitcoin is. And we had many firsts like that. We were the first exchange to provide an uninterrupted set of provable solvency audits. We did it for 8 years straight, and we always lobbied other exchanges to do the same thing as well. And we were also one of the first exchanges to maintain going at Bitcoin only. We listed Ethereum for 9 months, and after 9 months, I thought that was enough, and we went back and we made a very big stand that we're going to go Bitcoin only, and nothing else is in the best interest of our customers.
Wow.
And we focused on that. It was one of the best decisions we ever made, and we continued to progress until we sold the company.
We are going to take a quick break from the show to hear these messages from my partners. First up, are you ready for an international Bitcoin conference? Here's a look at Miami 2022, but Bitcoin Magazine and the team that brought you the world's largest Bitcoin conference is bringing the mission of hyper Bitcoinization global with the inaugural European gathering this fall. Bitcoin Amsterdam will take place on October 12th through the 14th at a beautiful venue in the heart of the city. Join thousands of Bitcoiners for 3 days of curated Bitcoin content that is relevant to the emerging Bitcoin scene in Europe and the global movement. Confirmed speakers include Dr. Adam Back, Alex Gladstein, Greg Foss, Ray Youssef, and many, many more. The European installment of Sound Money Fest will also take place on day 3 of the event, October 14th, and admission is included with GA and Will passes. I will be there. I'm super excited. So head to b.tc/conference and use the code HODL for 10% off your pass. You can also buy tickets to Bitcoin 2023, which will be held in Miami next May. And this episode is also brought to you by Fold. Fold is the best Bitcoin rewards debit card and shopping app in the world. How would you like to earn Bitcoin on every single purchase and spin a fun wheel so that you can earn sats every single day? Whether you're shopping at Amazon or grocery store or anywhere that you go, you can earn Bitcoin on every single thing you buy with Fold's Bitcoin Cashback debit card. And you can spin the daily wheel, which is super fun, to earn more free Bitcoin. And people have actually walked away with one whole coin on this thing. Head to foldapp.com/Natalie. And when you sign up, you get 5,000 sats. Now back to the show.
We continued to progress until we sold the company at the end of last year.
Okay, well, 2 questions about that I think are really important for the viewers and listeners. Number one, why Bitcoin only? As someone who really understands the technology and has this background in computer science. And number 2, can you offer maybe like a 30,000 foot view of running an exchange? Today, we hear about so many that have had liquidity issues, and maybe they were doing something with the coins that were held. I mean, can you just kind of explain what happened? Because clearly you didn't run into those issues.
No, we didn't. And that was a very big reason why I decided ultimately most people are not aware of the risks they take in most cases. There's always exceptions, but in most cases, holding money on exchanges. And we need to get most people off exchanges stat, to use an Americanism. But in terms of why we decided to go Bitcoin only, I mean, philosophically, there's 2 sides. One, behind the scenes, we had 2 co-founders, and I think one was more aligned with, there was a growing schism because one was more aligned with Bitcoin Cash and multiple altcoins, just philosophically, and the other, and offering very, very complex financial products, which was suited more to institutions than retail. And the other, which is, if you want to do that, that's fine. But the other was more focused on Bitcoin only, providing a good, safe product for consumers, everyday people, you say plebs or however you want to put it, and trying to support them, educating them to self-custody. And that was me. And so at some point we split the company in 2 and we sold off the complex derivatives product, and that became CoinFLEX down the line. And that left CoinFLOor. But by that point, we already had Ethereum. And it was still running, but then we decided, look, we're going to go through and review every coin we hold and objectively come up with criteria for which ones should we hold and which ones shouldn't we hold. We're not going to do this in a subjective finger in the air, decide. We're going to test everything, including Bitcoin. So what are objective ways to determine whether you should list a coin? Well, 1, technical maturity. It should be technically mature. It's not safe to give a customer something which is going to blow up. maybe you could, but I cannot see an objective reason why that's valid. Another objective reason is, does it have enough traction and community support? Because if it doesn't, then there's a risk it could just fizzle away overnight. And again, it doesn't seem reasonable to offer something which could disappear tomorrow, it could be fly by night. We're a regulated exchange, so there should be regulatory clarity as well. And so when you take those three, and also the last thing is moneyness, because these things are supposed to be stores of value. You're asking people to store value against them, so it should be something that, by definition, is at least attempting to be a money. So we went through these, and we thought these were the only objective criteria. If you could add more, let me know, but these seem objective. And when you went through every single coin, the only one that just made it, by the way, was Bitcoin. And nothing else came anywhere close, because either we tried to be very, really tight, and Bitcoin only just makes it. Most things only just make it if they're in that camp, and everything else didn't make it. Ethereum, for example, we finally delisted when they announced Ethereum 2, and some of the leading devs on Ethereum, and this was after about 6 or 7 months of listing on our site. Some of the leading devs said that Ethereum is not really going to make it, going to cut it for global growth. So we have to come up with Ethereum 2. So effectively, the creators of Ethereum are telling you that Ethereum is not good enough. Well, objectively, if it's not technically good enough from the view of the creators, it's not good enough. And so that was the final reason that I had for justifying the removal of Ethereum. And I never looked back. And they continue to do things to reduce their moneyness. And for example, moving to proof of stake is another shooting in the head, foot, knees, and heart at the same time move. And so for that reason, everything else was delisted. We went Bitcoin only, and looking at what the plans were for every other cryptocurrency, it became clear that nothing else other than Bitcoin will ever have a chance of meeting these requirements. But we had to work hard as a community to make sure Bitcoin doesn't fall into the trap of ever losing these 4 things, especially its focus on being a money, its focus on technical maturity and strength. And because if you keep those 2, and maintaining the community through education and so on. So we tried our part as well on building up a strong community, because if you lose that community, everything starts with the community. And if it has the wrong mindset, everything else follows, or everything else falls. In terms of running an exchange and the ups and downs, one of the best things that we did, and it was a hard thing, but we managed to, and companies several times larger didn't, was to put in place provable solvency audits. Because it's a really good discipline where on a monthly basis, you attest to the fact that you're solvent. And that reminds, 1, that gives people some comfort of mind, but 2, it reminds you of who's serving whom. And it leads to this culture that pervades everything else we do. And as a result, it meant that we made sure we knew what was happening with our funds regularly. So it was not possible for us to be insolvent. It made us prioritize providing simple, clean features for users. It just permeated, just like the way being an owner of Bitcoin permeates your soul and affects your culture and mindset. Having that sort of discipline on a monthly basis did the same thing for us. So by the end by 4 or 5 years in, you start to having I wouldn't say a distaste, but you are uncomfortable with offering users highly complex things that put them at risk in other ways. And those highly complex things are also the sort of things that tend to blow up during fast market moves and so on. So we would avoid that. We would take great pains, because our offering was simpler and we were only Bitcoin only as well. We were able to focus on making sure the security was really good. So we never were hacked in our entire period. We never had issues with downtime. When other exchanges would fail, we kept ticking. But more to the point, it became clear that many other exchanges had a misalignment of incentives. Their incentive was to keep people on the exchange as long as possible, to get them to spend money on speculative things as much as possible, which didn't feel to me that they were providing a service that met the needs of their customers. So that was one of the big reasons why I wanted to leave the exchange space and find a way of getting people off exchanges as quickly as possible.
All right. Well, that leads us into Fedimint, right? So can you talk a little bit about, you've been stressing for a long time the importance of self-custody, but I think, and we sort of talked about this in our pre-interview call, that for mass adoption, some people don't want to have the responsibility or can't have the responsibility of just becoming their own bank. And they do want to introduce a little bit of trust. So can you talk a little bit about the origins of Fedimint, what it is, and help people understand the idea of these federations?
Yeah, so most people, first of all, just to be clear, I think we're both on the same page that if you have the financial means, and hopefully that's getting lower each day, but the financial means, the technical acumen, again, hopefully that's getting lower each day, and just the guts, because we've been taught to be afraid of taking responsibility for our money. But if you have all those three, then you should definitely self-custody. I would say it's the gold standard, the Bitcoin standard is the best you can do. Although it is important to be aware that most people do not self-custody safely because your 24-word seed is also your wallet. And if you're storing it in a bank, then you're not got first-party custody because you've just given it to a regulated third party, for example. Or if you're giving it to friends, again, then that's second-party custody. But if you can do first-party custody correctly, then it's great. However, for most people, they have two choices because that's really 5%, maybe 10% of the world can get to that. And when you're thinking globally, 90 to 95% can't. And they're in two buckets. You've got some of the poorest people in the world who literally can't even get an account on an exchange. One, because they're regulated exchanges, they may not be able to give them accounts. And two, even if they're able to give them accounts, they're commercial institutions, and therefore there needs to be a certain amount of revenue they can make to justify that person being a customer. And for billions of people on the planet, they just won't make enough. They won't represent enough revenue to be worthwhile as a customer. So they're excluded because they're just not profitable enough. So there's billions who literally cannot get into Bitcoin for cost reasons effectively worldwide. And then there are a whole set of people who have money on a regulated exchange. And as I said, there are a few well-run regulated exchanges, but there are many, many, as we've seen, unfortunately, recently, where I would not feel comfortable recommending anyone hold. And having a viable option to not be on an exchange is something that we need to have. So along comes Fedi and Fedimint. Fedimint is a different paradigm for custody, whereas you have first-party custody where I would call it do-it-yourself custody. You do it all yourself, you figure it all out with education and so on. Versus third-party regulated custody, which is another way of putting it, stranger custody, where you're giving your money to a stranger who's incentivized to earn money, and you're giving them your money. And the risk is, like in some recent cases, people might do something like steal your money or gamble with your money and take, and so on and so forth in their quest to earn money, as opposed to doing what they're supposed to do, which is just look after your money. So then you have this middle ground, which is community custody, where think of it as the idea where first party custody is not your keys, not your coins. This is not our keys, not our coins. So the community is coming together to elect some of the most trusted elements of their community to custody the Bitcoin on behalf of the community. And that is the high level idea behind Fedimint.
So talk to me a little bit about the process of, starting something like this and really gaining the customer base and the awareness, because I think for so many people, even if they were introduced to Bitcoin, especially in the last 2 years since the pandemic, I think that was like kind of an explosion of education because of the value proposition with all the money printing and the number go up. But really, in terms of educating people on custody and on the risks and fallbacks of some of these exchanges, how do you build a company like this?
Yeah, that's a very interesting question. I think that's probably, we have I like to think we have a quite unique approach. There are some other companies in the space that are doing similar things, and we're learning from them, but we're really focusing on this. So, and I think it's the reason why we raised our round so quickly in I think 6 days or something over a bank holiday weekend. So I would split it into 3 chunks where we focus 1/3, 1/3, 1/3. So coding, coaching, collaboration. So on the coding side, it's Fedimint is this open source protocol that we're supporting, and many others are supporting as well, not just us, Blockstream and Spiral, so Block Free Spiral, and many others. We're talking to Bitcoin miners and so on who also want to support that. And then Fedi, which is going to be this incredibly simple Lightning wallet, which works directly and interfaces directly with Fedimint and Federation, so you can just use it seamlessly. So that's the coding side, and that's just 1/3 of the business. 1/3 is on coaching. So we plan to create almost like this network of guardians, or the guardians are the people who are responsible for looking after a given federation's Bitcoin around the world. And we'll provide this support network of Fedi Knights, as it were, who effectively are there on the ground in local countries to educate, run workshops, answer questions locally. And obviously there'll be a hierarchy above them. Some of the best might become considered Fedi masters, as it were, who can support these regions of the world. So think about certain large organizations like an Avon or Amway or so on, who have these very large structures of educational structures, which can support people around globally in multiple languages, but that's the organization, they can be relatively small. We want to be able to do that because that's really important. We believe that it's not just about the artificial intelligence of the software, but we also need to upgrade the human intelligence of the users. Because no matter what the software is, sometimes we try to come with these overly technical solutions to dealing with concerns or issues, when the best solution is just to educate people to protect themselves from scams, to make sure they manage their money correctly. Maybe they should monitor the federation if the balances are too much on a given federation. Split your funds across multiple federations is good. Maybe you shouldn't have all your money in one place. All these are sound money management things, which anybody should learn, but we're going to educate people about that and about Bitcoin. Also, if your personal balances on a Fedimint federation are above a certain size, then hey, maybe you're now at a level where you should self-custody because you have enough to make sense. And our objective is to turn people into better Bitcoiners all the way through. And then the final thing is collaboration. It's not about all Fedi, but we're going to partner. There are some incredible companies out there. You've got Bitrefill doing incredible things, Pax4, Zebedee, Fountain FM, Stackwork, where people can earn $2-3 an hour and immediately generate money and increase and in the global south, that's a ton of money, and the list goes on. And instead of trying to compete with these, we will partner and collaborate with them and educate our users about them so they know that they can custody and immediately say, well, now we're going to show you how you can start earning money now that you've custodied immediately. And we're also going to show you how you can convert it into the local currency using this other service so that you can have it in your pocket. So we give them an all-round education to solve actual problems they have, as opposed to give them Bitcoin or give them a wallet. We're going to give them a way to remit at a lower cost, cutting out Western Union, or to earn money and to better their life with their family and friends.
Wow, that's incredible. So, just from a practical standpoint, I have a certain amount of Satoshis. I give them to you or to this federation. How does that work? Who has, it's multi-sig, right? Still, it's multiple keys.
Yeah. So first of all, you don't give it to us. We're building software, and we're making that software available as open source. But a group can take that software. Let's say that I was contacted by a group of people who represent a village in South Africa the other day, for example, and they're trying to set up something like a Bitcoin beach like idea, but in South Africa. And their challenge is that the current alternatives are just too technical for them. And Fedimints are designed to be really, really simple to set up. So as long as you are someone who cares about your community, that's your only qualification to be able to be a Fedimint guardian. And being able to turn on a computer and click run, that's pretty much it. That's where we're aiming for. So they've seen this and they want to set it up, and they're a perfect group of people to be guardians. They've had a track record of prioritizing social capital over financial capital. So they download the Fedimint software. It will be available eventually on Umbrel, on Nodal, on Start9, on Raspberry Blitz as well. So really easy just to click and get going. Let's say 5 of them form a federation or are the guardians of a federation. They all download the software. They put in the addresses of all the other 5, and then the Fedimint software locates the other 5 and forms a federation automatically. Wow. They just sit back, have a cup of coffee, a cup of cha, whatever it is, or tea in my case. And when they come back, Bitcoin nodes have synced and a federation set up, and they will all see a QR code, which is effectively the address of the federation. They now can download a Fedimint aware wallet. To begin with, it will only be Fedi, but we really hope other people create Fedimint aware wallets. But you download Fedi, for example, and you scan that QR code, and that's it. You have joined the federation. There's no passports, there's no date of birth, that's it. And also no 24-word backup. You've just done it. That's the whole process. Scan the QR code and you're there. So now anybody who joins is part of that federation. Those 5 guardians are together managing any Bitcoin sent to or from that federation. You need a majority of them to work together. So if one of them, or even if 2 of them, for some reason, went from a lifetime of being honest and helpful to the community to switch, it wouldn't be enough, because you need a majority of them to all of a sudden turn to Mr. Hyde from Dr. Jekyll, wow, overnight.
Well, so forgive me for some of the, I'm much less technical. So how can you, within the federation, how do you know what coins belong to who? And I mean, how does the custody aspect actually work?
Well, for someone non-technical, that was a very, very super interesting question. And that's one of the things. There are no accounts in, because normally with other exchanges, and this is what's exciting to cryptographers, actually, and this is where you might have heard it uses this concept called Chaumian mints. And it's this privacy preserving protocol. And that's the way you can identify who owns what without actually having accounts for Natalie and Obi and Eric, etc. So the analogy is, instead of saying, here's your account and this is the balance in your account, you would say, I'm the bank in just taking this privacy protocol, ignoring the federation type stuff to begin with. I'm a bank, and I've got a kiosk window, a cashier's desk. Behind me is the safe, and I can also write you IOUs. I've got a notepad, and I can just write IOU $10, $5, $1. So you give me I don't know, $20 notes. And I give you a note saying $5, and then I give you 10 $1. Let's say $1, and I give them to you. You can now take those, as long as you and other parties trust those notes. You can use them as to replace that $20. It's like an IOU for the money. And at a later stage, you can come back, give me some of the remaining IOUs that you haven't spent or the ones you've acquired, and I can check, and it's got my handwriting or my signature at the bottom. I can accept them from you, and I can destroy them. I shred them, and I give you the equivalent amount in cash, because I knew that I was the one who wrote it. So
isn't that the way banks in theory should work, but instead we have fractional reserve banking where they're giving out the IOUs without having the reserves?
Exactly. That's how it should work. And by the way, it is possible, by the way, for the person giving out the IOUs to actually give out IOUs for money it doesn't have. That's possible. That's a risk if there's one person, by the way. And that's, but we'll come on to that. So what, in 1983, David Chaum, and he's one of the people that Satoshi referenced in the white paper, came up with this form of cryptography, and it's very simple cryptography called blinded signatures. And it's nearly 40 years old. Next year it's going to be 40 years old. So it's very, very mature, battle tested, and relatively simple. It's not trying to do this fancy zero knowledge proof stuff. It's very simple. And what it allows you to do is effectively sign something without knowing what it is that you sign. So you can sign, but blindly, effectively, hence the name. And what that can do in the context of this minting scenario, this cashier scenario, is it's effectively the same as you painting over the screen with black paint so that you don't know who you're dealing with. So then someone can give in some cash, you don't know who it is because it's blind, and then you return and sign back a token for that person, and they can go off and spend it. Now, they can spend it, they can give it to someone else, they can do whatever they want, and then they can return it back to you, or someone else can return it back to you. Now, just the simple addition of the blinding of the cashier window means that you now have perfect privacy, because you have no idea who's giving you the money. You have no idea who's returning it to you.
Wow.
And you don't have any accounts for people. It's just money in and money out. But people know how much they have, and they have the notes. So they don't need you to know how much each person has. They just need to give you the IOUs act like a bearer instrument, as long as you trust the bank. Now, the downside is it was invented in 1983, but it had two problems. One, the money that you put in the first place was cash, and cash can only be owned by one person at a time. You cannot have multiple people owning the same pound note or dollar note until 2009, when Bitcoin is invented. Because with multi-sig, multiple people can now own the same amount of money. And the other problem was there's one bank, and that one bank could become dishonest until Liquid and Bitcoin and Blockstream invented this, or not invented, but popularized this idea called federations. And that allows you to take one process that normally one person performs and split it up amongst multiple people. And it can only progress if a majority of them perform the task. And that was the missing piece. After that, a number of cryptographers came together in Hackers Congress in Prague a few years ago and thought, well, we can take this amazing idea for cryptography called Charmian mints that's been around for 40 years, combine it with Bitcoin for the money instead of, say, the US dollar for the money, because the first money that multiple people can own, and then use federations. So that instead of one cashier, you had multiple cashiers working in concert. So even if one becomes dishonest, the others can keep them honest. And we could effectively create this federated Charmian mint, i.e. Fedimint. Fedimint is the mashup of that. And so we decentralized this incredible privacy tech.
Wow.
And that's where it started. And that was the base. That's the base technology for the first time that we've created.
Wow, that is fascinating. I can really understand why you had such an easy time getting investors, including Jeff Booth's company, right? Ego Death Capital, and some of these other great investors. So just to start to wrap up here, in terms of what you mentioned about getting Bitcoin into the hands of billions who still don't have access to it, can you kind of crystallize how Fedi helps with that?
So Fedimint is this base protocol that provides incredible privacy for the community of users that are using it. And it's a very, very simple system to set up and run, etc. But it is like Bitcoin, the core protocol, or the Lightning core protocol. It's supposed to be running on a machine in the background, just sitting there like a set-top box. You forget about it. But that's not the user interface that people use. And so the Fedi app is designed to be like a Lightning wallet is for Lightning Network, or a Bitcoin wallet for the Bitcoin network. It provides this user-friendly, really, really simple interface for using that. But it's so much more than that, because it also provides, as I say, through collaboration, it provides a window into the Bitcoin ecosystem, showing people in a very easy, highly integrated format a number of the services that are available, and they're already there, but people don't necessarily know about. So if we integrate it into the app, people can, with a click of a button, be using any one of these other services and gaining benefit from that. And then finally, Fedi as the organization isn't just the app, but it's this whole approach to education. Mm-hmm. So we can make the app really easy to use, which we will. We can bake in education into the app, and we can bake in these collaborations. But we believe that for systems like this to really gain mass adoption and get to the point of hyper-Bitcoinization, we have to educate people on the ground, in person, on how to use this at massive scale. And that's the other part of what we do.
Well, to go back to something we mentioned earlier, Web3 being that buzzword, and people really do, they get behind it thinking that this is going to create that decentralized future of, say, social media and take back some of the power. What do you want people to know? Like, what is your take on this movement and all these people saying, I want to help create Web3?
So, I mean, unfortunately, Web3 has sort of been hijacked as a term, but I think the desire to take power away from highly centralized internet companies and bring it back into the hands of users is laudable, and we should try to do that. We're trying to do it with Fedi, giving communities back the power to be their own bank, as it were. But the funny thing is, we're going to see, and which is why I'm very convinced that Bitcoin wins in 2023. We're going to see a number of companies in the Bitcoin space come out with incredible technologies, not just Fedi, which will actually allow people to do this, but to do it properly, not in this rushed first to market, but ill thought out, ill considered, non-scalable way, but in highly scalable, easy to use, incredibly powerful, privacy preserving ways. It's just a matter of crazy happenstance that they're all coming out in around the same time. But I'm incredibly excited about it. And the Bitcoin as the base layer, with Lightning as the second layer, you're going to see this plethora of really interesting third layer solutions. And Fedi and Fedimint are just one of them.
Do you still go back to Nigeria, and can you offer any perspective in terms of adoption of Bitcoin there? Because I understand that it's one of the countries where Bitcoin is most needed, but also adoption is growing faster than in other places.
Yeah, so I travel around the global south a lot. In Africa, I go to Nigeria now and again. The last time was a year ago, but this year I'll be going to Ghana for Afro Bitcoin 2022. And I'll also be going to Kenya for a set of workshops and maybe others to be decided. But in terms of adoption, but I also have a lot of friends and family in Nigeria. And yes, the adoption levels are crazy. Outside of the sort of the bubble of the West, the really exciting things are happening in the global south. And it's also bottom up. There isn't necessarily this structured process to try and force it happening. I was talking to the guys from Paxful, and they're one of the organizations that does quite a lot to try and educate people on the ground in these different areas. And whereas in Latin America, they put in a lot of effort to grow, they then came to West Africa, and they said it was all organic. They just came there and it just exploded itself. You have to understand, almost every Nigerian from about 3 years old is a businessman or woman. They're hustling. So when they see an opportunity to earn money or to improve their life or so on, they'll naturally think about how they can turn it into a business. They're the ultimate sort of capitalists, And so it's no wonder that the level of adoption is growing exponentially.
Well, you've talked about on both this show and other interviews that I saw, just this idea of you want to be part of a change in terms of righting some of the injustice that exists. Can you talk a little bit about how Bitcoin actually addresses that?
Well, as I said, Bitcoin is the world's first meritocratic money. And I want to be clear, I don't think it logically can get to a point where everybody has exactly the same equal outcome. And I don't even think that's necessarily desirable. But I do think that you want to structural roadblocks that prevent people from just being able to achieve their best are just not good for the person, and they're not good for the world. And one of the biggest structural roadblocks is money, especially the challenge of being far away from the money spigot is a big injustice. And that's globally. And for many years, Western Europe was sort of protected to some degree from that. But now, even in that case, it's like we're seeing the euro falling underneath the value of the US dollar. And if things continue like this, the British pound will soon follow, because the US is becoming more insular and focused on making sure it's protecting itself, not itself and allies anymore. So they're starting to see the effect that the rest of the world, who weren't so close to the money spigot, have experienced for the last 50 plus years. Just after I was born, not just after a few years, because I could remember it, so I can't remember when I was like 1 year old, but 3 or 4 years old. I remember that I still remember to this day, one naira was worth more than $1. Now $1 is worth 500-600 naira.
Wow.
That's in a period of a few decades. And this is when you're far away from the money spigots, because you're in a developing country, and that on a global level is incredibly unfair. And this way you solve that is to have the world reserve currency separated from any country. That you don't want to have this triffin dilemma where, for one country where it owns the world reserve currency and it has to deal with its own local, its own national economic and financial considerations. You separate the two and you go back to having a money, which has been the norm on the gold standard for many, many, many decades and centuries, that is not owned by anyone, but fit for purpose for modern times. And that's what Bitcoin is. The repercussions of that will take many decades to play out. But I think if I can help towards that making happen, I will absolutely do everything I can.
Well, you mentioned 2023 starts the time when Bitcoin wins. So how confident are you that Bitcoin will succeed and will be able to overcome the obstacles of, say, countries coming out against it or trying to ban it or trying to ban mining? I mean, are you like all in on Bitcoin, or are you still, it's a portion of your portfolio and yet you recognize some major risks or in the long term?
I don't call myself a Bitcoin maximalist. I call myself a Bitcoin rationalist. So I am rationally all in on Bitcoin, because if it just logically, when I go through, I cannot see any other, including fiat, that I'd want to hold in any significant quantity. So I am fiat poor, definitely. I maintain the minimum amount I need to maintain to just cover my costs. I do have a salary, so that allows me to supplant that. But anything that's spare is dollar cost averaged into Bitcoin. Now that I think speaks loudly towards my conviction that Bitcoin can deal with, just from a rational point of view, all of the concerns or risks that people may have. There are two areas that concerned me for a while. One, and these are two questions that keep being thrown at Bitcoin. One is that Bitcoin mining wastes energy. And the other one is that Bitcoin is not useful for anything other than gambling and selling drugs or so on. Both of them, I believe, and many people in the space and industry believe, are incorrect. And we believed that for a while, but I did believe that many laymen and laywomen didn't understand this. But a number of initiatives that are happening right now are set to debunk those and prove those to be wrong. And I'm fortunate enough to be part of two. Mm-hmm. So on one hand, on the Bitcoin doesn't have value, well, this is the biggest question, because if you and when you show that Bitcoin does have value beyond these two things categorically, then you actually resolve many other issues or questions. Fedi does that. By the end of next year, we aim to have 1, 2, or 3 places that are hyper-Bitcoinized. And the way we define hyper-Bitcoinization is, just to have a measuring stick, is 51% of the people in a given city or country or region using Bitcoin every day. And that's not holding it or trading it, but using it to buy, sell, and so on. That's our stretch goal. Our main milestone is super Bitcoinization, which we define 21% using it every week within a given region, which will still be pretty good, but our stretch goal is 51%. The way I like to think about it is we 51% attacked that city or that country effectively. So we will make that happen, and we will make it happen in the next 18 months. At that point, and because we're focusing on the global south, where you're taking people from 0 to 1, or maybe from 1 to 2 versus in the global, although everybody can use it anywhere, in the global north, you're going from 100 to 101. It has far more of an impact. And therefore, when we combine that with our visits across the EU parliaments and Washington, DC, which we also plan to do throughout next year, we will just point, instead of trying to explain it, we'll say, here's a ticket, there's a country, go there. Kenya's beautiful, El Salvador's beautiful, wherever it is, we do this. And just see it for yourself. We won't discuss, see it for yourself. You can talk to anybody you want, and then come back and understand that Bitcoin has value. And on the other side, Bitcoin wastes energy. I have recently completed the investment in a Bitcoin mining company in East Africa, which is specifically, I wanted to invest in a company using 100% renewables, using hydro, but as well as that, it's using the renewables in rural East Africa to help electrify rural East Africa by helping dozens of aspiring energy entrepreneurs who are making these energy production plants that the national grid is no interest in servicing, because they're in the middle of rural Africa. But they're allowing to electrify villages and townships and so on. They can normally not get loans for this because it's a very risky investment. Banks want to invest, but they have no way to know whether these organizations will actually, the villagers will actually pay back the money, because it's an unknown quantity, leaving them to continue to light their houses and heat their homes using paraffin and kerosene, which are incredibly noxious and, by the way, bad for the environment. But it's clean hydro-based electricity. So along comes a Bitcoin mining organization that we're investing in called Gridless. And what they do is they act like an anchor tenant for these mining companies. In the same way, if you go into small town America or small town Europe, and a shopping mall wants to set up to bring new to revitalize a town, they have an anchor tenant like a UCI cinemas or a Walmart or so on, and that effectively guarantees that they can fund 30-40% of their costs, and that allows the bank to lend to them and to take the risk on the other 50-60%. Because we have some of the best Bitcoin miners in the world, friends of mine from Texas who've been mining since 2010, who are going to work with these guys to make sure they operate to the best possible standard. They're coming in from Texas, yeehaw, we're going to build some mining rigs, Obi. They're coming over and they're going to make sure that these operations are operated to the highest level. Because Bitcoiners are trying to make sure we're not trying to just make money, we're trying to make Bitcoin into money here. And so they're going to work with us, make sure we operate to the highest levels of governance with the highest social impact using 100% renewable energy. So I'd really like to see the ESG arguments against that. And then we will show that Bitcoin is useful and it doesn't waste energy, and it actually pays for energy wherever that energy is, even if it's in the middle of the jungle where no one else is willing to pay for it.
Wow, that is amazing. It's so awesome to talk to you. I'm getting more and more bullish. You know, sometimes it gets a little bit hard in this bear market to keep up the spirits, but thank you so much, Obi. Anything you want to leave the viewers, the listeners with, especially during this time where on a macroeconomic level, things are so volatile, so choppy. We're basically waiting on bated breath for what a couple people, central bankers are going to say and do. What do you want to leave people with?
I think that focus on building, and focus on building. That's what you should do. I am incredibly bullish for Bitcoin. It's times like this that Bitcoin really shows what it is. It's the lowest thing, but it's the most powerful thing. It's this cockroach currency, mold money. It can deal with the most difficult situation, but it keeps on ticking and keeps on growing, and it can survive everything, and it will change the world.
Wow, I don't think I've ever heard that, cockroach money. I love that. Obi, thank you so much.
No worries. Thank you.